Blackrock is getting into the action. One of the biggest hedge funds, banking, and money guys in the world. They're coming out with their say in the real estate market, and it's not great at all. And I fully agree. High interest rates, 30-year mortgage going to 8%. We're actually seeing a lot of construction companies going bankrupt. We're also seeing a lot of investors who used to invest a lot of money into real estate suddenly seeing themselves buying a boatload of bonds and treasuries. We're seeing a 10-year treasury being sold like hotcakes. People want to buy that because why not make 4 to 5% a year without risking anything? I mean, it's treasuries and bonds and CDs. And why would you ever buy stocks or real estate these days when you can make so much more than Treasury Department in the bond market and you don't really have that much risk? So now BlackRock is saying that there's going to be a lot of credit distress. And they also emphasize several times like commercial real estate, for example. And they're also saying that they're going to be needing a lot of reserves if there is a soft landing. We're also seeing a possibility of a soft landing being very low. We're seeing unemployment going up. And also with the Feds hiking up rates like crazy, you're already seeing guys like Jamie Dimon coming out and saying that, hey, we could be seeing interest rates going from 5.5% right now to 7%. Which pretty much means that 30-year mortgage is above 10%. And just on top of that, you're also going to be having a whole wave of defaults. Right now, if they hold rates till September, and at this rate of the economy, we're going to be seeing a full-blown recession. You're not going to be seeing a soft landing, which is pretty scary. And especially now we're getting massive alarms being raised over the stability of San Francisco's commercial real estate market. Now, here's the thing. We all like to talk about San Francisco, but even Manhattan's real estate is taking some pretty massive beatings. I mean, look at Manhattan. You got several brand new buildings being built, right? You have like One Vanderbilt being built. You also have over here in Hudson Yards, a whole entire neighborhood filled with skyscrapers, which are, by the way, mostly empty. And there's condos that are not being sold. And we also have, especially this One Vanderbilt, supposed to rival the Empire State Building in terms of size, is now facing a pretty massive amount of vacancies. I mean, look at how big and fat this building is. This is a very nice, high-end building, super tall skyscraper. And guess what? They can't even find tenants. Same thing with Hudson Yards. They can't even find any tenants. And then you go over towards San Francisco, the situation is even worse because you even have construction companies are just leaving at this point. You already have two massive, super expensive 40 to 50 story skyscrapers being canceled. And this really shows you that, hey, this high interest rate is being very crazy. Could even be seeing a credit distress even without a recession. And the recession chances are pretty freaking high too. And this is some really scary stuff, all things to consider. You're also seeing a lot of commercial real estate banks sweating right now because most of their net worth is tied to commercial real estate. And these banks, they have these commercial buildings which are being sold, for example, in San Francisco for 70% off. They are sweating right now because they used to have all these commercial real estate properties with less than 5% vacancies. And then suddenly after the pandemic, everything changed. The way we work changed. The way we live life changed. And we also have the rise of remote work. Now people are like, instead of going to the office, let's just hop on Zoom. And that's exactly what's going on. We're also seeing some massive buildings, whole entire condo complexes being handed back to lenders. And not to mention, we also have New York City's finest. If you guys thought it was just San Francisco and Los Angeles and Seattle, get ready for Manhattan. Manhattan real estate is always very desirable around the world because it is the economic center. The biggest stock market is in New York. So if you look at this, you're already getting some pretty scary stuff, right? Buildings, their valuations are being cut down by 50%, even in Manhattan. If you look at this, downtown Manhattan, which is pretty much like you got Wall Street, you also have, the Flatiron District, you got West Village. I guess I consider all that like the downtown region. They're all taking pretty fat hits here with vacancies of 21%. Not as high as San Francisco's 35 to 40%, but also you also have places like 60 Wall Street, which is empty or near empty. If you check out the building, it's a pretty nice building. Like, it's not like a little townhouse. I mean, this is a pretty high-end building too in the middle of Wall Street. Look at this fat, and big building. This is 60 Wall Street, and you're telling me this massive tower is pretty much 100% empty? They can't even find tenants. We're also seeing a lot of companies scattering out as well. Goldman used to have a fat crew in Manhattan. Now they have a lot of people in Miami. And this is showing people that, hey, traditionally tech goes to San Francisco, finance goes to New York. Now everything's very skewed. Even Las Vegas is getting tech companies, even though they're more specialized in gambling. So we're seeing this, right? We're also going to be seeing BlackRock pretty much dunk on commercial real estate. They pretty much says that commercial real estate is risky, especially office real estate, but industrial properties is very good. Now, what do industrial properties do? Obviously, many shipping companies use industrial properties. And you also have manufacturing. A lot of it's being brought back to America. So you need industrial properties for that. We're also seeing expansion of suburbs and more Midwestern cities, which is causing, for example, more online orders to be shipped there, and thus they need more storage and warehouses. So BlackRock is smart, right? They are pretty much ditching office real estate and even residential real estate, going for things like industrial properties, especially specific industrial properties in different locations to maximize money and profits. And that's exactly what they're doing, which is causing BlackRock to actually make a lot of money. Even this year, they're doing a pretty fantastic job with many units of the trade department making stacks and stacks of fat cash. And look at this. Just to let you guys know, San Francisco office building sells for half of its purchase price. And you may be wondering, that's not bad if they got like 2 decades worth of price appreciation. Not really. We're seeing buildings having years and years of price appreciation just to be sold at 50, 60, even 75% off of the original price they bought it for several years ago. We check out this one. This is from Blackstone, which is another massive company. They love to specialize in real estate. They sold the building to someone else for $25 million, and they bought the building 7 years ago for $50 million. Now here's the thing. If you bought this building for $50 million back 7 years ago, this building better be $70, $80 million. And then after discounts, you should sell it maybe at a break-even price. But no, they sold it for 50% off. This is the same thing that happened to Wells Fargo. Wells Fargo bought this very nice high-end building right next to like the Trans America Pyramid building. I mean, they bought this office building around this location, which is a good location too. They bought it for like $108 million, right? And they have almost 2 decades of price appreciation. They sold it for like $40 million. That's insane. And this is why people are really mad about this whole situation. Not to mention, San Francisco itself isn't even that great of a location anymore. You got high crime, high homelessness, a lot of drug use, shoplifting. Business owners are sick of it. You're also seeing a rise of online work. So BlackRock is issuing big warning, guys. Be careful in the real estate market right now.